Okay everyone, welcome back to the channel. Here we have a pair that's very popular, something that I don't trade personally, but a pair that's very popular. Gold, XAUUSD. So let's see how I'm looking at this particular market. Again, so what we had over here is we had an all-time high that was established, well, the all-time high back during COVID, the 2020 period. So this here represented a structural high in the markets, and since then this is the daily time frame. We've seen a break of structure to the upside. So this here confirms our break of structure or our shift of market structure. Again, boss, break of structure, right? And so from here, since then, we've just been trailblazing higher, right? There's been no real signs of us stopping, right? When it comes to identifying potential POIs, yes, we have them, of course. A POI is just essentially an area that's left an imbalance, especially here on gold. We have a fair value gap over here, so this now becomes a potential POI, which I'm going to now label in gray. So this is a potential POI simply because it's left an inefficiency in the markets, right? And we understand inefficiencies in the market are potential target areas. So this is a daily POI, one that's very low down. You know, this is back at 2052 roughly. And since then, we've just been trailblazing higher and higher and higher, right? There's been no real signs of us slowing down, or is there? So now if we head down to the 4-hour time frame, we can begin to dissect some more basic and clear structure starting from the left. So again, what's happened over here is I've marked out some very basic structural highs, which I had predefined before the video. So we've had a break of structure over here to the upside. Now quickly, what makes a break of structure? Now we want to see a correction over here. So this here is a correction. And so what makes a correction valid for me and the rules that we trade at LiquidFX is simply that we need to see at least 2 candles for a retracement. So this here is a retracement because it's of course more than 2 candles. So we've had a break of structure to the upside. We produced a new all-time high back then when this was being printed, and now from here we've had a retracement down, giving a higher low before this particular structure gets broken again. So this here is again a break of structure to the upside, BOS. And now from here, what we need to understand is that we have a structural low down here established previously, and we have a structural high up here established previously. And so from here, this gives us our premium and our discount. So if I quickly label that on, we have a premium up here and we have a discount all the way down here. And so the only thing I would like people to take away from this is simply that we've had a discounted low down here. So this discounted low gave rise to a new high. So now we're now dealing with this structural high. Now from here we did have a pullback that did fit the rules, or the rules that I trade for a pullback. So what we had is we had price pullback over here. So this here is a pullback before breaking structure and getting to the upside. So now we've simply had 3 structural breaks to the upside, 3 bosses or 3 structural breaks. And so this firmly puts us bullish overall in this market. And I don't see any real signs of this slowing down in the next few weeks and months. But let's look at very recent price action. So this is being recorded on the 29th of April 2024. Again, now currently the all-time high, or the high that's been produced, is at 24.33, 32, around that sort of area. So from here on the 4-hour time frame, what are we looking at? What are the things that we need to bear in mind? Well, it's the 3 things that I always go through all the time in pretty much every video. We're looking for structure, some sort of structure. We're looking for some sort of fair value gap, and we're looking for some sort of liquidity. Liquidity. And also we're looking for PD arrays. I beg your pardon. There's 4 things we're looking for: structure, fair value gaps, liquidity, and PD arrays. Okay. So from here, what we see over here is we see the 4-hour giving us minor structure, right? We see minor bullish structure to the left of your screen. So we see price giving a high, low, high. Then from here, we've seen our change of character. So this here is a 4-hour change of character. Now, the reason why this is a change of character, not a break of structure, is simply because we have to remember we followed structure all the way down here from the left, right? We understood we had a low, we had a high over here. Now this low over here got broken in this region. So you could mark these as minor structures, right? Minor highs, minor lows. But it's again, this is external structure. We're dealing with external structure from this low up to this high. So anything in between is all internal. And this is exactly what we're going to be going over now. Internal structure on gold. So internal structure on gold is like this. I have it quite simple. What we've had over here is we've had a change of character over here, right? We've had a change of character. So this here marks the H4 chalk. H4 chalk or H4 change of character, right? Very important we understand this basic logic of the market. So what does this H4 change of character actually represent to us as traders? Well, simply put, the H4 change of character represents a shift from demand to supply, a shift from demand to supply. So what we had over here is we had a demand zone just over here, the last point of demand, this being this candle prior to the imbalance. So we had some fair value gaps over here. This here represents the 4-hour demand zone, right? As you can see, this 4-hour demand zone has failed, right? So H4D or H4 demand, let's just label that. This H4 demand zone has failed, right? We've seen price break through with the body and giving us a simultaneous change of character. Often demands and chocks or demands and supplies the failure of them will lead to a change of character. So both of these are used intertwined in your analysis. So again, we have the high up here and we have a change of character down here and we have a 4-hour demand. So from here, we understand that we are short-term bearish. So from here, what can we reasonably expect? Well, it's important to understand that we have large pools of liquidity to the left, right? This here is a massive trendline liquidity over here. We have some trendline liquidity over here, being one of the main targets as we look for potential sells, right? So we have a change of character in the 4-hour, and we have liquidity here to the downside, right? Sell side liquidity. And so from here, the 4-hour time frame would do, if we were to continue bearish, I want to see a mitigation of some of this fair value gap, if not all of it, before heading lower. So if we quickly go down to the 15-minute time frame, we can introduce the concepts of multi-time frame analysis and why this is so important in your trading. Okay, so let's quickly go back to the H4 change of character. Yes, so here we have the 15-minute time frame. Just going to clear this up a little bit. Here we have the 15-minute time frame. And so from here, what is the thing that we want to identify? What is it that we're looking for? What we're looking for over here is we're looking for 15-minute structure to shift, bullish to bearish. This is what we're looking for, 15-minute structure to the upside. So what we have over here is we have the market giving us a structural high over here. Just over here in this region, you can have your structural high over here. Going to change this in blue so it's obvious that this is 15-minute structure we're looking at. So this is a structural high. Then the market gives us a structural low, structural high, structural low, and the structural high coincides with this 4-hour high over here. This 4-hour high, if I just bring this to people's attention, this 4-hour low, this 15-minute low produced the 4-hour high, which is all the way up here. And now we've had the 4-hour change of character. But what you need to understand is that it's no coincidence that the 4-hour change of character actually coincides with a 15-minute break of structure. And this is arguably the most important thing from the entire video. Okay, let me get rid of that. Yep, the 4-hour structure coincides with the 15-minute break of structure. So this here represents a 15-minute break of structure, right? So when we're looking for potential changes of character on the higher time frames and changes of character, structural breaks on the lower time frame, right? A very quick hack that we can understand is that a 4-hour chalk is the same as a 15-minute boss. And so from here, what is the most recent gold structure actually doing, right? So we see a gold structural high and we see a gold structural low all the way down here. So let's quickly label that. So we have a structural high over here. Oh, let me bring this down. We have a structural high over here on gold, and we have a structural low down here, structural low. And so from here, once we've identified our structure, the most important thing, or the next thing to look for, is a dealing range. Where are the dealing ranges? Where is this specific dealing range? Well, it's quite easy to see. So we have a dealing range from this structural high down to all the way down to here, this structural low over here, right? So this structural high and this structural low gives us a dealing range to work with. And so what does the dealing range give us? What's the most important information a dealing range actually gives us? Well, it's this number over here. This 50% level represents the equilibrium in price. So this 50% equilibrium level gives us two specific regions. It gives us a premium over here. This is the first thing it gives us. It gives us this premium over here. The second thing it gives us is it gives us this discount over here. Okay, now with premium and discount, what do we do? Because this is one of the most important things when it comes to IPTA and the overall ICT workings, right? We have a premium just above here, and currently we're in a discount. So essentially a market narrative will be to look for buys up to a discount, right? And if the market is willing to sell higher from this region, then only in this region we look for sells. Now, there's a couple of things to point out here when it comes to this, right? When we're in a discount, the discount should be an area only for buys, right? We only want to buy in a discount. Only buy here. We only want to buy in a discount. That's the most important thing. Now, when we are above the discount, when we are above the 50% level into what we call a premium, in the premium on gold, there's two things we want to look for. We either look for sells or we look for a potential continuation bullish. And the reason why I say this is because gold on the higher time frames is bullish, so it's unlikely that we are to see sustained lower prices. But from this region over here, once we've reached a premium for this structural range, again, we have a structural high and we have a structural low. So once we've reached a premium from here, we can expect sells above this 50% level down to this region. And then what is the reason for sells? Because it's important to build an activity, build a narrative for both sides of the market, right? Consider both sides before making a decision, right? And if you can't, if the market gives you a day where you can make a strong argument for both buy and sell, that's not actually a good thing. That's not a good reason to get involved in a trade. It's actually a very good reason to stay out of the market. But from here, we have a ton of buy-side liquidity that's actually forming. We have a structural low down here, the 15-minute low, and we've had a trend line touch, 1 touch, 2 touch, 3. You can even argue 4 touches, right, based on this trend line. So this trend line is buy-side liquidity, right, BSL or buy-side liquidity. And so from here, right, once we've again identified that dealing range, which we already have in this case, once we've identified the dealing range, right, we understand that when we do look for potential sells, right, we have all this liquidity down here to attack. This is a lot of liquidity to attack, and it's reasoning for lower prices, right? Once we get into a discount and we get our AMD. So in this premium, ideally, I would want to see an AMD model. I would want to see a power of 3 bearish model over here. This is what we look for in this region. Power of 3 bearish model, right? This is how I come to the charts every day. Every day I come to the charts and I ask myself, where's the structural high and low? Structural high up here, structural low down here. Where are the liquidity pools? In this case, we have a massive liquidity pool over here. We're in discount. We're going to be buying up to premium. And once we get into premium, we look for this wonderful entry model over here, the power of 3 bearish entry model. Okay. So that's a quick outlook on gold. This is where I think gold is going to go. Well, not where I think gold is going to go. This is my overall speculation on the particular market, right? And if we do see lower prices from this region, we do have a very, very large liquidity pool over here to target, a very massive liquidity pool in the context of sell side liquidity, right? We have a lot of trend line liquidity forming over here. So this could indeed give a reasoning for lower prices, right? On top of that, we also have the 4-hour chart giving us potential fair value gaps, you know. So we have a fair value gap sort of down here in this region. We have some inefficiencies over here. Again, this inefficiency is at price point 22.26. So this is a 22.26 POI. Again, a potential fair value gap that could be of a target if price does want to continue lower, right? So again, this is the 4-hour time frame. And of course, what we've seen over here is we've seen a 15-minute dealing range being established. The blue dots are a 15-minute structure, not 4-hour structure. So this here is internal structure to the overall bearish structure. So if we see price head higher right? We see price giving us a clear sell model, then this POI could be the next interest, right? Now, what makes this a point of interest? Well, the reason why this is a potential point of interest and an area as analysts that we should pay attention to is because we have a fair value gap over here and we have some liquidity resting just above it. So this is an inducement, right? So this is an area of inducement. And in inducement is simply just liquidity, right? It's a fancy way of saying liquidity simply drop near a POI, right? So this is my general outlooks on the gold pair. I know it's a very popular pair. It's a pair I don't really trade myself or really look at too much. I only look at it for the members because we have a lot of members at Liquid FX who like gold, who are into gold and the yen. I don't really trade those pairs personally, but again, if you are a gold trader, then I hope this helps. You can apply this to any market, whether it's gold, forex, indices, futures, commodities, even crypto, right? These concepts work everywhere. It's the basics of ICT. So if you like this video, give it a like and thumbs up, and I look forward to seeing all of you in the next one.